A very interesting transaction announced this morning by Metals One. Dan Malling joins us now to tell us more about it. Good morning to you, Dan.
Hi, Alistair. How are you?
Yeah, fine. How are you?
Yeah, good, good. We've been busy. Sorry, I've been a bit quiet on the news flow than normal, but guess that's part of the stage of where we're at. We're growing up a little bit, and hopefully this is evidence of that.
Well, this is a big one, isn't it? I mean, so you've obviously been putting a bit of work into this one, a $1.8 million convertible loan note with a company called Lions Bay Resources. Tell us what's involved.
Right. Look, thanks, Alistair. Look, I went down with the team to South Africa a few months ago, and we made an initial investment into a listed company called Lions Bay Capital in Toronto, which is founded by my old chairman, John Byrne. And he's been down in South Africa the last sort of 5 or 6 years, sort of scouring over opportunities and building up relationships. And we got to an introduction to some of those a few months ago. And importantly, what we're trying to do here is unlock a region in South Africa, which has been sort of overlooked for a while. Yes, it's had its difficulties in the past, geopolitically, probably seated in that regard. But in terms of the underlying resource potential there, for we're seeing particular gold opportunities, it's huge. It really is.
So this is a plant with a potential for some gold production from it as well. So tell us a little bit about the nature of this plant and what you plan to do with it.
Yeah, that's correct, Alistair. Look, in its current configuration, the plant is actually a power producing plant. It produces steam and electricity. It's currently it's about to start the refurbishment program. We've gone through a few months of making sure it's in, I guess, as good a working order as you could be before that process starts. Part of the engineering studies as well in these plants is to see whether it will be suitable for a gold roasting configuration. Now, for those that know the region and some of the mineral bodies around there in South Africa, they'd be aware of the fact that a lot of the concentrate is refractory-based concentrate, which requires gold roasting to really extract the proper yield. Otherwise, what we're doing as a mine site type operator is we're selling a lower grade ore into the Chinese market. So we're trying to upscale the value of the gold product in that region in South Africa and play a role in unlocking that value.
And in terms of the power and steam, there's a mention of a nearby chrome project as well, which I think might be interested or at least engaged in conversations about that.
Yeah, that's right. And look, it's a huge site. I'm not sure whether you can see the picture in the RNS, but excuse me, it's a large industrial site. A lot of the industrial processes on the site are sort of shut down for their own reasons. But one that's still active is this large sort of chrome production sort of facility. It's operated by a large Chinese conglomerate. They've spent tens of millions of dollars over the last few years building up their process. And one of the key inputs into their process requirement is obviously power, as you would expect in any industrial process, but also steam is important. So we're quite fortunate in the configuration of our cogen plant that we can produce the power, and we can upscale the steam production as well, which becomes valuable. So yes, the chrome facilities, as we're calling it at the moment, is paying for very expensive gas from Eskom. So they're keen to see how we progress with our plant development.
It's an interesting combination, really. I mean, power is at a premium in South Africa, as we know, and gold obviously riding very high in the market at the moment. So a good pairing.
Yeah, absolutely. And we're seeing when we review, the nearby sort of mining operations, a lot of them are effectively mothballed or going through some sort of administration or bankruptcy type process. But part of the reason, they're not up and running is that, they don't have access to these key bits of infrastructure that can unlock the value of those mines. And a gold roaster can do that for the type of ore that we're seeing there. So, look, we're going to be targeting, I guess, smaller mining operations that don't have the capital budgets to go and possibly unlock their mines. And also look at possibly coming in and joint venturing or buying some of the larger mining complexes, let's call them, that have existing infrastructure. But importantly, their production will definitely benefit from a gold roasting facility. So no, it's exciting times, but still plenty of work to do.
So now tell us a little bit about the structure of this deal, Dan. You guys have gone for convertible loan notes in this instance. What's the thinking there?
Yeah, look, the thinking there is to be as close to the asset as we can, or the tangible asset. We've raised a fair bit of money through our financing over the last 6 months, which is now concluded. We've spread the portfolio between sort of exploration, well, predominantly exploration, and more recently we've invested in some more sort of listed companies with larger projects. But I was really keen to make sure that we're getting close to that tangible downstream asset as much as we can from a small capital base. And this is something, and this is a project that we can do that. So the loan note facilitates, I guess, security over the plant itself. If we convert into equity in the structure, we've basically got a third of the structure, as it builds up with this South African gold focus.
And it comes in two tranches, your loan note outlay.
Yeah, correct. So there'll be upfront one, which is $175,000, which keeps the sort of near-term working capital of the plant in check. It also facilitates the completion of a real detailed CPR, as we're calling it. So we've received a replacement value report, which ascribed a value of just under $40 million to the plant and its current setup. We're hoping to demonstrate through the CPR of the plant, one, the potential economic return from the plant from being a power and steam producer, and also with the gold configuration, the gold roasting configuration, what that plant could be worth for us.
Yeah, very interesting indeed. Now, I was just reflecting before we close it out, Dan, that there might be something of a recovery in the mining sector underway. It depends who you are and what you're doing, but as far as the Metals One portfolio goes, it's very wide and broad, and there's some real strength in depth being built up there. So it strikes me that you guys are in one of the better positioned companies to benefit overall if there is a sort of sustained mining recovery.
Yeah, look, we hope so. We have spread ourselves across jurisdictions and commodity or metal classes, let's call it that. Next week, I'm presenting at the OTC sort of conference, and really focusing in on what we're doing over in North America and to a degree down in South America. But look, I think where we're positioned, having cash and liquid assets behind us to go and actually capitalize on some of these opportunities in the market, it's great, and I hope everyone else around us is doing the same thing. It's exciting times.
Well, we look forward to lots more news flow from Metals One as well. Thanks very much for joining us in the meantime, Dan Malling.
Great. Always enjoy, Alistair. Take care.